this there in the Redler All Access. I'm going to retweet it also. You know, it's my little tempo music. Yeah. Usually I'm running to this a little bit up a big hill. I don't know if some of you guys saw the video of me and Chase doing that yesterday. That was great at lunchtime. So um, here we are. My name is Scott Redler, Chief Strategic Officer of T3 Live. I hope everyone is okay in these crazy times. Let me turn this off. It's been a long road, and if you're watching this, chances are you probably approached the market in some fashion. Some of you guys out there might be, active traders. Some of you might just be investors. Some of you might be an active trader and a swing trader and an investor. Some of you are looking just to learn how to maneuver the markets whatsoever. And a lot of people are home now, and a lot of people have extra time, so they're trying to educate themselves on how they could potentially make some cash flow from trading also, which by the way is not easy. Don't be like, I'm home now, I'm going to start trading. No. You definitely need to learn, and there's a lot to go over before you press the keys. So I'm going to talk as if I'm talking to Redler All Access, where I assumed a lot of you guys know technicals and know about a bit about the markets. So this way, some things might be over your head, some things might not be over your head. You'll hear some red dog-isms or this and that you might never heard before. But I definitely speak in my own language at times. So we'll segment it. Right now, what I want to do is I just want to talk about kind of where we are in the market right here, and go over the chart of the S&P and the SPYs, and then I'll go into a few other stocks and names as if I'm doing kind of like a midday morning call, which is what I do every day on Redler All Access. Every day I do a morning call from like 8 till 8:20. I go over all the sectors. I go over about 20 different names, and I usually highlight on what the media is highlighting on, like what's the buzzword, what's the obsession, so we know how the market's reacting to the obsession. And obviously this week we know everyone's kind of obsessing midweek over oil. Would there be that oil deal? Would the president get the Saudis and Russians on the phone and get them together? And meanwhile, you had a 2-day pop in oil that was huge. Now that's probably over. Every few days is a different obsession. And then obviously the claims yesterday and the jobs report today. How is the market going to deal with it? The reality of this craziness that's going on in the world, as far as just so many different facets to that. So anyway, for compliance, I got to do a few things. I got to show you the VTF with what positions I have now. Me personally, this market spot right here, I don't love. I feel like it's a little bit of a coin toss on which way we're going to go. We're going to go back down and retest those lows within the next week, or are we going to do that in a month from now? It's hard to tell. Everybody has their opinion. On Monday, Tuesday, when I was doing the videos and we had a nice move, I was looking to sell as many 270, 273, and 275 calls as possible because we were overbought into the end of the quarter. That to me was a compelling spot to try and get synthetically short. So you'll see that if you go to the VTF right here. I'll pull it over. So guys, this is the virtual trading floor. I have the virtual trading floors also watching. Say hello, guys. Watch. I could take my fingers and I could type and say hi. That's me. Hey, Scott Redler, right below Brad. That's how interactive this is. What up, Philippe? Hey guys, we're right now doing a little bit of a midday Twitter public video. Why don't you guys say hello and say where you're from? These are all professional traders. Lots of different skill sets. Lots of them have different different ways they trade, and each one of them tries to add their value into this community, because again 400 500 eyeballs are better than 2. And I'll be I'm sitting in this office by myself. This is the Short Hills office. Okay, we created the virtual trading floor to be a product so you don't trade alone. So it's almost like I created this product for me, because I'd be losing my mind if I was sitting here alone. Instead, I have all these guys from all over the country and all over the world that have become really good friends of mine, and we've been going through life together. There's been a lot of complicated, crazy headlines that you talk to, and you had just people to bounce things off of. As far as stocks, life, about our spouses, about our kids, we try and keep it more focused on work, but we're real people here. So we, especially when people are going through so many unknowns like we've been going through, you need a community. A community breeds strength. And as you can see, a lot of them are all in here, okay, from the Ukraine. I actually go to the Ukraine. I went 4 times to teach a big group of traders there. They were awesome. Um, I do have a sleeping bag in Short Hills. I brought it in over there because I wasn't sure what was going to happen 2 weeks ago if they were going to let anyone through the street. So I brought my sleeping bag. I brought, hold on, I'll show you. Cliff bars. Very, very essential. I did 2 Ironman, so I know, Cliff bars, what they could do if I needed nutrition. We have Gatorade bars, very, very important. Hold on, you guys can keep talking while I get more of my essential stuff. You guys know how I love my iced coffees. Remember, you guys would watch me in the city, and I would be, having my iced coffee on the table, and instead I had to get like 20 of these things, and there's a lot of carbs in this. It's not like an iced coffee from the city. And then this, woohoo! I try not to drink too many of these. Sometimes on a Thursday after the close, we do the recap, and gotta have it. We all, kind of open it up and have some wine or have whatever anyone has. So anyway, that's that. So this is the crew, and then if you look over here, this is my what they call what do we call that anyway? My card. It shows what I'm in, what I traded. What I traded is in the flat column, and then this is what I'm actually in. So a lot of these things were put on earlier in the week, okay, which actually worked out very well. If you remember on Monday, Tuesday, I'm like, guys, I would not be chasing this market. I feel like they're propping it up, end of the quarter, the whole pension rebalance thing, whatever. So that's when, I shorted some SPY 270s for this Friday, for today. I shorted some 275s. It shows I've had it overnight, meaning could be for days. This one was, I did actually for next week, the 280s. To give myself room when we were higher, when there was like $2-3 in premium. This is also, so all of these SPYs that I shorted to get synthetically short at the right time. I know, selling calls or puts, it's definitely a risky game. Okay, but at extremes, when you want to have more room, I found out in the last month I've made a lot of money into the extremes, selling calls on the upside, and then into the extremes on the downside, selling puts like 15% below. Mark Cuban's doing it also, actually. He said it on CNBC. I was like, hey, Mark Cuban's doing it. He must be reading Red Dog's note. Anyway, it was just good. A lot of people that I think that are pretty strategic in the market to do that. Plus, I also trade intraday, and I've had longs and shorts and nothing to do with options. But anyway, I put this on yesterday for next week, just an extra thing. And then today I actually shorted some Apple 255s. So because Apple right now is at 242, you can actually see it there. Actually looks like it might roll over here for those of you day trading. I was shorting it earlier on in the morning, But anyway, I don't want to get into it. There's a little support there. But anyway, let's continue. I've been known to babble a little bit. You think Friday at 9:45 I could open this at 11:45? All right. Why not? It's early. It's 12 o'clock somewhere. It's been a long week. Sorry, come on. Just a little sip. Anyway, well, let's get to the chart. So that's what I have on now. Okay. I traded Tesla this morning. A bunch of different times. Boeing, I bought it before when it came in. Like you can see where it was actually earlier, and then right around 10:38. So it shows you so I bought it, sold it, then all of a sudden on that pullback, I was buying it, which was literally an hour ago to 124 to 123, and then had a nice bounce. So there's some intraday tactical cash flow things that I do. On my morning note, I said, hey, maybe, Boeing's worth a bounce considering remember last time we did a public call, I think I was selling 205 calls. I'm like, this is crazy. A rally from 90 to 180, I could sell the 205s, and that was a great trade actually. So I haven't traded it since. So I'm like, if we hit 120, oh my goodness, maybe that's worth a bounce. But that's in my note. Some guys want to know what I keep talking about as far as my note. Well, that's Redler All Access. If you look here, there it is, Redler All Access, t3live.com/RAA. That's my note. That's my morning video. That's my recap. That's my 15 charts. That's my private Twitter sphere. So if you find yourself that you need, a game plan and a process and you want to learn, that's right there. You can click on that, t3live.com/RAA. But let's go back to what's happening here. So actually what's happening here now, it looks like the market's rolling over a little bit. So let's even put that here. So here, here is just from today. This was your, I guess, mini uptrend from yesterday, and then that broke right there. I might as well just show you, quick. So that was basically like right around there. Okay, now we're, high, lower high, lower high, but that's more micro. Anyway, but that's cash flow. And what we do, we kind of got rejected right here at yesterday's highs. It's good to know where the prior day's highs are. Someone's always like, Redler, what are you talking about when you say know your levels? Well, yesterday, we hit a, let's go right here. Yesterday it hit a high. Oh, I just did that wrong. But anyway, of 252 and change. Today it went to 253 and change, and did what we call a red dog reversal, right? Pushes through an area, makes people think it's going higher, shorts get squeezed, longs get baited in, and then it reverses, and then it becomes a quick action area. So anyway, that was that. So let's take this down, and let's go to actually what I wanted to show. We're going to go into this, which is a little bit more strategic, or this is where you see my charts every day. Every day I've been coming in and trying to give a video, and then I also put a chart together just to give you guys a blueprint of the day, especially in the public Twitter sphere. So here is here's what I wrote this morning. If you guys remember, just to give you a little education again. Remember when the 8 and 21 day broke right there? Okay, remember this big ascending channel? Well, that's when we switched gears. That's when we said, hey, if you read my ebook that went out in January, that's when I went from 20 positions to like 5 or 6, and then you had the big gap down. If you have a big gap down that doesn't get filled, that shows you power and direction of that gap, and that's what happened here. You had a big gap, didn't get filled. You had this candle. It confirmed the weakness by selling below 32.14. This was your first V bottom into 28.55. Bounced back up, right around here. If you remember, we were 12 to 14% off the highs. Okay, I'm like, what the hell are we doing 12 to 14% off the highs when China's closed still? They just closed Italy. They were thinking my cousin from Homeland Security was like, hey, basically, we're about to close Rome, and that was even before Tom Hanks got it, and we closed the NBA. I'm like, how the hell were we down 12 to 14%? Like, no way. So that's when I was buying the VIX calls, which we put out there in the public, 27, 29s, 33s. We were buying the 300 something puts and made a lot of money from this day right back below the 200 day all the way down to here. We did a 2-week play. I'm like, remember we did a 2-week play to give it time to get to here or below. And you know what? When you guess the direction correctly, just even to potentially retest, you don't need to know, how quickly it happens. And remember that day? Anyway, let's fast forward. This is the 21.91. That is all the world knows. Okay. Actually, I have my son Chase. He's on my note now. Okay, because he's home and he needs extra work to do because the schools didn't give him enough damn work. So I'm like, I'm going to send you my note every day. And I want you to write down 2 questions and ask me about them. So yesterday I went for a run. You saw the video. I'm like, Chase, what's your question? He's like, what's 21.91? I'm like, that's a freaking good question, Chase. I'm like, that's what we call the reactionary low. That's what we call stage 1 low. A lot of people call it a lot of different things. The primary low. Well, anyway, that's what we know. 35% off highs. So from the time we corrected to the lows, 35% off highs. That is what the world knows. Everyone from there was going to, gave their opinion on how much we're going to bounce and da 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 da. During the process on the way down, if you remember, long term, I was like, I'm a long-term investor. So long-term investor. Listen, let's do long-term investing for a second. I'm 47 years old. I did not look at my statements, okay, in November when they were at highs, and I'm not looking at them now. All I know is what I'm doing is I'm putting my monthly flows in. You put your monthly flows in from your 401k, your 403b, and it could take a year, it could take 2 years, it could take 3 years to get back to all-time highs. It doesn't matter. It's your long term, but you have to keep investing and keep doing your monthly flows to get the average cost going lower. A lot of my friends, actually 2 of my friends who have older kids, the financial crisis paid for their kids' college. Why? Because they started their 529 plan in 2004 and then did it every single month through 2007 to 2009. And by the time 2010-11 came around, markets back at highs, and their kids were ready to go to Indiana and Maryland. So, for me, Chase is 11, okay? So I actually started a little late. I started at age 5, and it was 529. So with 20% or more off the highs, I said, hey, let me up my 529 because I could afford it. Only do what you can afford, okay? I don't want to sound, someone once called me elitist or I don't know what the hell they called me, but they said, I'm just giving advice. If you put the 529, I went from X amount, I upped it by 50%, and I put a little extra money in there just to catch these costs, catch these prices, and I'll probably keep it at 50% more, for the next year or two, and then if all of a sudden, things get normalized and we bounce back a lot, I'll go back to what I was doing monthly. But he's 11, so I have 5 years. So that's some kind of lucky that he's not 14 or 15 right now, because that could be a little bit, a little bit dicey. If you have a 14, 15-year-old, you know that if he's a freshman or sophomore in high school, that you might be a little bit worried of how much you accumulated. But I think that's still going to be fine too, because you could also, if whatever you made, you could, the first 2 years you could, you use the money that you still have, and then you borrow from the last 2 years. But anyway, so long term, 529 is in, and I'm increasing. 401k, I'm continuing, and then I had a cash account that my wife, she was a doctor, she UMDNJ, she worked in Newark, which was a crazy place to work. And then she started a private practice. She left UMDNJ, but they wouldn't let her roll over her retirement account there. So, yeah, and you can't make any more contributions. So I let it go for a while, and then I sold it, went to cash into a 3.5% rider about a year and a half ago. I didn't catch the top, and during this phase, I'm like, let me map out 20% off highs, 30% off highs, 35, 45, 55, because we don't know how far, we don't know the duration, and we don't know the depth. So you have to map out levels. So I put 2 installments in, one about 20% off highs, one about 32% off highs. It was a good one. So my cost average on her cash account is about 27% off highs. So that's half. The other half I'm not touching. If we rally from here and that's the low, okay, it's in there, great. If, all of a sudden in a month from now, we revisit those lows, or we break those lows, or in a week from now, whenever it is, I personally think this is, that the numbers are going to be so staggering that it's hard for me to fathom that we're not going to at least, be 50 or 55% off highs at some particular point. But that's another conversation. But I'm going to wait just in case. If we get there, I'll have more powder that's dry. If not, we continue to go, or we have what we have in. So anyway, I just went over the 401k. If you have it, and then the 529, and then if you had cash on the sideline that you want to put to work, you do it in stages. You never buy strength in a bear market bounce, or you never buy strength in a complicated time like this. You only do it at extremes. That's the way you actually catch the down move and create alpha for yourself. And you could last is by only at extremes lows. And right now, if you look where the market is, let's get to the market. I'm going to erase this. It's not really an extreme right now. This was your 2191 low. Oh, I was talking about Chase. Chase, yes, that's the low. And now what did we do? We came up to 2640 area. Okay, at this point, that's when I was putting on those calls that I sold because we just had a big move. I felt safe selling, the 270s and the 273s just in case we got up there. I was hoping we would push through to get there on Tuesday because at the end of the quarter, maybe Wednesday, it didn't happen, so I didn't get as many offers as I wanted, but I got enough. So, from here, you had a red dog reversal. You guys want to know what a red dog reversal is? Some of you guys do, some of you guys don't. Red dog reversal is when you push above a prior area like this and reverse, okay, after a big move. So you could have shorted when it went back below, or get out of your longs if you were playing this for an oversold sequence. Remember the sequence that started here with this gap that never got filled? That was a nice sequence. Now we're potentially in a new downward sequence. Why? Look at the size of this gap. Okay, remember the gap up here that didn't get filled? Well, we were up here, so if just friggin', had followed through right away. Here, the market's not so sure yet. But you also got another small little red dog reversal today, which I just showed you right here. Got above the high, didn't hold it. If it went above and stayed above, maybe it could have filled the gap. Instead, it went above and didn't have enough strength to stay above, so came back in. Some guys could have shorted versus that, or not. I'm not really doing that much today. This, to me, is a noisy, not a compelling area. I feel like I don't want to get too short just in case we do hold here and there's some kind of push before maybe coming back down and this period goes longer, or not. I kind of think that this could get to 2407 or to here sooner than later. But in order to do that, what does it have to do? Extend this. It's got to get below this first. Okay, so anyway, today was a small little red dog reversal for those of you who tactically trade. Pushed above, came back below. You could have shorted versus a 20-minute high. And now here's your gap. And the longer this gap stays unfilled, the higher the probability that we stay in that direction. So the gap is to the downside. We tried to stabilize. What do we know now? We know you have 24.47 to 24.55 right there. That's your point of reference. At this point, it's above it. The very active bulls are saying, but Red Dog, you have a higher low here. It's true. For now, we have a higher low. So here's your low, here's your higher low. Goes sideways. In order to go this way, it's got to get above this spot and stay above it, which doesn't seem like it is. So anyway, this is like your blueprint of the SPYs. Okay, here it got above and couldn't hold it. So now this is your new point of reference. What is this? This is 25.38. So this changes. So I always change the points of reference. That's what we know now. That's your new pivot resistance for the day, or maybe moving forward. And then this is your support. In order, by the way, in order to get to 2407, and in order to get to 2344, and in order to get to 2191, what does it have to do first? Think. It's got to get and stay below this first. Okay, so if you're a bear and you want us to test the lows, or if you just think we're going to, it's got to break that. Okay, but we'll see. At this point, there's been a lot of divergences. At first, like within the last 2 weeks, it felt like tech was a lot stronger. And then obviously the troubled areas, which are the airlines, the casinos, the cruise lines, the hotel stocks. These are all that's very, very affected right now. I hate to say it, but I do think there's going to be bankruptcies in a lot of lower level carriers in the airlines. I do think there's going to be some hotel chains that might go bankrupt. People are like, oh, this is just a biological event. No, guys, this is much more than a biological event now. They closed the NBA down, they closed schools down, they closed airlines down, they closed countries down. Yes, granted, no one asked for this, but it's here, and it's and it's going to take a lot of different forms. And I always say invest and trade within your means and live within your means. Just realize your means might change a little bit, so definitely save for a rainy day. Don't go spending your cash because you have it. And don't put too much in the market too fast. So anyway, that's your support. Okay, right there. So if you look where we are versus the lows here, you'll see some troubled sectors, right? Look at jets. It's the airline sector. It's the 11.25. You had a feeble bounce into the 21-day. By the way, look at jets also. This is when it broke the 821-day and the 200-day, okay, which is part of my rules. You do not hold anything that breaks your 821 and 200-day, and then it was below the 8-day this entire time. So this trend was to the downside. Use your rules and your moving average. So anyway, this was your reflex bounce, and now look where this is. This is almost back to these lows. Okay, well, if you look where the SPYs are, the SPY is all the way up here. Okay, so you look at jets, it's on its way back down to here. So it's either going to double bottom here, or this gap got filled. So it doesn't matter anymore. It's back below the moving averages, or it's going to continue lower. If that continues lower, markets aren't going to like it. Look at American Airlines. It's already there. American Airlines is already at, through these primary lows. Okay, I remember during the financial crisis when I was trading, I always was able to see what the next problem area would be, because every time we had these bear market bounces, some things just never bounced. So you're playing this big bounce and everyone's buying, but why isn't GE bouncing? Why isn't GE bouncing? Or why isn't Fannie Mae and Freddie Mae bouncing? Or why is Lehman Brothers such a piece of junk? Or why is the market would tell you where the next trouble spot or what the trouble spots are, because they would not bounce when the indices bounce. And right now American Airlines is looking like it's in trouble. Okay, we'll see. Hopefully not. What does Delta look like? It's right back down there also. By the way, all these airlines, look at this. If you've used my moving averages, rules, look where this trends broke. Look when it was below the moving averages. That was your out. You didn't have to be in this thing from 50 all the way down to 18. I also kind of think, listen, I do think the casinos and the hotels are in somewhat of trouble too. If you look at MGM, okay, first of all, that's where it broke. I don't know if it gets back down to these lows, but remember, in the financial crisis, these things went to like, I think LVS was 85 cents. And this is MGM. You know how much debt MGM has? We better be back to some kind of normalcy mid-May, because if we don't get back to some kind of normalcy in mid-May or June, everyone that's putting together all their big seminars and all the things that they canceled, everyone's really everyone, like the guys I talk to in that business are all, they're all putting dates on in September, in the fall. So everyone thinks that Vegas will be open in the fall and life will be back to normal. So hopefully it is. If it is, I think these will all survive. If it's not, then it's, then you're gonna have a lot more rolling bankruptcies and a lot more crazy economic fallout. But again, that's for another time and a place. So just because you think, MGM is cheap now, it could always get cheaper. And I hate to say it using MGM, but anyway. So back to this. So we'll see. This is definitely something that you guys got to watch. Boeing also. I did make a little bit of money in Boeing, but Boeing, look how far it came down already. You had your big move back up to test the 21-day. Got rejected. Remember, right here I was selling the 205 calls, and now it's back to here. If this area doesn't hold and it starts heading back towards below 100, they're going to have to tap it. They're going to have to tap the line. But again, look at it here. This is when it broke the 200-day. And my rules is you never hold on to an investment that's below the 200-day. As a trader, you definitely don't hold it below the 21-day, let alone the 200-day. And look how low this been. It's been below the 200-day since 350. And then it rode the moving averages all the way down this entire time before having an oversold broken bounce. Anyway, let's hope Boeing can hang here. It's that's why today I thought it was worth a look long, just because tactically it was a decent trade. Now let's see if it's got a hold in here. This is 140. 120. So my strategy was buy adverse 120. So I actually sold the 120 puts today. It was when it was 127. But anyway, this needs to hold here. Otherwise, the market's definitely will see lower prices sooner. So again, by the way, look at CCL, the cruise line. It's already back at the lows also. You had a broken bounce, and look what rejected it. Same moving average that rejected pretty much every oversold bounce. So just the cruise lines are foreign entities. They're not going to get stimulus. So sad, but it is what it is, and they're not essentials. So let's go back. SPYs are sitting in here. I went over S&P cash, pushed through here, move this up a little bit. Now we'll see. Now the SPYs are in a box. Now you don't even really need to have crazy opinion, because it's either going to break below 243.90 and then hit this and then maybe hit that, or it's going to hang in here a little bit longer and try for upside. What, in my opinion, could get this to go to the upside? It's hard to tell. Trying to think, like what I've been thinking about at every stage is, okay, what does the market know? What doesn't it know? Market knows a hell of a lot now, but it still doesn't know when a potential vaccine can come. It still doesn't know when are we going to be actually open. The president first said April 13th. Now it's May 1st. Does that turn into June 1st? I know some states are already saying school's over for this year, which is crazy. Oh my God, kids have only been home for a month. Oh, I haven't told Chase that yet. He still thinks he might have a little bit of a lacrosse season come May. The good thing is we're still 44-0, and we stay 44 now. Only undefeated program ever in Milburn history, 2027 class. But anyway, so this is the little box it's in. So the Qs have been a little bit better. But again, look at this resistance area getting rejected. If the Qs start breaking below 180, that could be a leading indicator down. And then you have this gap that at some point, might get filled. And then you have the lows down here. I'm not supposed to be touching my face. Hold on. Look what I have. Everybody should have this. Have this at your desk when you walk in. Go like this. Kill the germs. And then when you leave the office, do it again. When you go in your car, do it again. When you leave your car, do it again. I don't see anyone here. I come in, I go out. But anyway, still. Looks like the market's starting to fade right now. It's now 12:07. So, are there any names acting really special, to go to when markets are down? There's been a bunch. Every time we had a down open, there were some names that would go green first. I call it, go red to green for cash flow. But there are key areas, okay? Netflix has been kind of like a go-to name All right, but at this point, it's starting to roll down a little bit. So it starts breaking this area. You know, it could see 353, it could see 340. So you have to be careful. Okay, if you were playing it because you thought it would hold in here and break above this, which is kind of crazy. No, now it looks like it could play some downside catch up. So you got to be careful. Amazon also, it's been trying to hold up. If Amazon breaks this spot here, 1893, you could easily see this, you could easily see that. Look at this, you know, quick move, showed a lot of relative strength. And then what was that? A red dog reversal in 1973. It's good to know what a red dog reversal is. It can get you out of your longs and get you short. Amazon right now is at 1898. If Amazon breaks this spot and the market wants to roll over this afternoon, this thing could definitely, you know, be a short for some of you guys. So we'll see. But this is your key spot. There's a lot of room below. And if all of a sudden these names start to lose relative strength, it's going to be the next, you know, I guess, catalyst for the market to go lower because they were holding up well. So now if you have the weaker sectors breaking down and then you have the stronger ones hanging in there, there's nowhere to really hide. You know where you hide? Cash. Cash is a position sometimes. A lot of times. You don't have to be in every trade. But this is that spot right there. Apple. Gave you a red dog reversal right here. I gave you guys a little lesson on the red dog reversal. Well, did another red dog reversal here into this little spot. So now if Apple were to break this, that would also not be good for the overall market. But here you have a high, now you have another lower high. Now we're back below all the moving averages. So this was a good spot to sell if you were playing some kind of active sequence from here. So now we'll see. You know, yesterday was also a buy. Tactical things to do. Here was a red dog reversal sell. So if you get out of it at 255 yesterday, you know, because you were riding it up or got short, or 2 days ago, I'm sorry, you were able to make some, or no, that was Tuesday. You were able to not be caught long and make money short. That was the big short that we had. I was short spiders, that was Tuesday into Wednesday. Then if you also got out here, then yesterday, there was the opportunity to say, hey, 239 is the low. You know, some guys like, no, it's getting to 234. It has to. So that was why it became a reversal area, guys. The key to some day trades is finding where's the rubber match spot. Where are the bulls and the bears actively having a battle? So yesterday that battle was right here. Would it get below, you know, would it get below this spot to fall apart, or would it get below, get people short, get people out of some of their longs that didn't get out already, and then reverse? So that was a good trade yesterday. Now that trade's kind of done. But now you got to see, does this area hold or not? You know, now some people will say, hey, red dog, that's why I shorted 255 calls for next week. You now have somewhat like a little bit of a bear flag here. Or this could be your H cell setup, right? Comes down like this, can't really bounce. So some people are shorting the bounce, and then they add to it when it breaks the bottom of the H. So here's the, you know, it looks like an H, right? The H cell setup. I use red dog reversals and H cell setups in order to tactically make cash flow when the market's trying to figure out what's next during a crazy complicated time like we have now. Very complicated. Be safe. Wash your hands. Live and trade within your means. Anyway, we'll see what happens here now. Does this hold or does it break below? Hard to tell. To me, it looks like it's going to break below. They just actually came out today. I didn't hear anyone talk about it, saying that they're not opening their stores mid-April. It's not till May. So for another month in the U.S., you cannot go into an Apple store. So don't lose your friggin'. This is like my best friend when I go for running. Right now, the market's down 1.7%. Okay. But then you also had like these coronavirus names that were showing a lot of relative strength that also you still need to use your moving averages rules. And if you use them on Zoom, you were able to catch a nice trade into the peak of the Zoom, you know, focus. And then it also broke the moving averages and whatnot. So if you look here on Zoom, all right here when it was really, really tight, when the whole world was getting focused in on the coronavirus, all of a sudden, look, above the 821 day, it had a nice breakout to 164. Then it came in, because look how extended it was from the 8th day. Tried to go again, did a red dog reversal, and then right here it broke the 8th day. That's your out. If you had this on a swing trade from here, okay, yes, you could have done a little bit better, but you're not always going to pick a top. That was your out, right there. Okay, if you got out here yesterday, there was a decent play as it seemed like it was going to try and hold prior breakouts that turned into support. And now, though, the longer it stays below this, you know, the more it could roll back over. But, you know, use your moving averages. Use your pivots, use your tactics, use your tier system, and you can do it for anything. Yesterday I got out of Peloton, even though it's acting really well. I probably shouldn't get out of it. I just felt like I wanted to get out of it. Sometimes, this just happens. But anyway, just getting a little bit of back and forth, back and forth. If you're still in Peloton, use 2580s or stop. Work changed right here. Broke below this spot. Now it's back below the moving averages, and there's some room here if it doesn't want to be sometimes names are chosen names because of scenarios, and then they also act well technically, but then sometimes you just got to raise cash everywhere. So and if it loses its relative strength status, you got to get out of the way fast. Okay, and that you could see that when the 8 and 21 day breaks. This was the upper area. It looked like it was going to get above 30, and it failed right there. Okay, and then if you got out there, great. If not, you could have got out at the 8 day. Now, I guess see if this area holds. This is from back when. So maybe this turns into a red dog reversal, on Monday. If it breaks below, comes back above for a trade. But for now, it's just doing the slow drip. Remember, like all those names we played in December through January? There were great January effect plays, and then I think I got out of them mid-January and never looked at them again. You got to know what type of play you're getting into and why. And now you definitely, if you're going to do anything, you need to know why and have a reason. Oh, you guys want to see this again? Okay, this is Redler All Access. All you got to do is go to t3live.com/RAA. If you want to try it for a month. I just had my best quarter in the business, guys. Okay, on top of my other best quarter, which was the fourth quarter. So that's 2 different ways to make money. Okay, we were in portfolio approach here. Okay, during this ascending channel when everything was hunky-dory and the world was normal and above the 8 and 21 day, and then which wound up being one of my best quarters in the business, and then the tactical approach, same way. So that means for 6 months we've been able to maneuver whatever the market puts in front of us, and that's what you have to do as a trader. You need to be able to evolve. You need to be able to switch gears. The only way you can do that clearly is if you feed the brain on the weekends and you're healthy and you're fit and you have your balance. You do whatever you need to do to work off a bad day. Now this is getting a little bit closer to here. No man's land still though. Somebody asked me about gold. Gold looks pretty good. I screwed up the gold trade actually. The other day I put on a call spread and I just kind of got lazy and took it off. But this does look like it could break above this descending channel here, and maybe see 155 and then 159. Maybe you go out in 4 weeks or 5 weeks and do a call spread where you maybe buy the 160s and sell the 175s. That's what I had on and I took it off, unfortunately. Gold seems like, unless the market really gets crazy hit and we all of a sudden go back to those lows fast, there might be, they might need to raise money, so they sell gold, so gold doesn't do what it's supposed to do. That happened over here. I think someone told me that Russia was selling a lot of its gold because they had liquidity issues, and then once the market bounced, it kind of normalized again. And now this does look like a tight setup where I don't like to trade GLD and sit in it. I'd like to do options with gold because so many factors, whether it's a dollar, whether it's countries, whether it's a lot of overnight trading. So I think if you want exposure to gold and you think in the next 4 to 8 weeks it's going to be at highs, put on a call spread. Buy the 157.5s and sell the 167.5s. Chances are it'll cost you $2-3 to make 3 or 4 times your money if that's what you want to do. Let's see if anyone's still with me. How are we doing over here? BTF, anybody still here? Hello? You guys are used to me babbling. Anybody listening? All right. Looks like we faded lower a little bit. All right, cool. See, there's all my friends. I could tune right back in. I haven't had a sip of beer in a half an hour. Wow. I shouldn't be having beer at 12:16 on a Friday, but there's nobody here. Anyway, I don't do this often. What else? What else can we talk about? The bull-bear debate on the actual virus. First of all, it's just crazy. We're all starting to learn of people who have had it, who have it now, and it's become a very big reality. Especially, I just heard actually someone just told me a story that New York City just bought 25 containers because there's too many dead bodies in New York City, and they don't know where to put them. So they bought big frozen containers to put the bodies in the containers. That is fucking crazy. Holy shit. What I heard they did in China, actually, from my friends there, is they brought in big incinerators and just incinerated all the bodies. That sounds insensitive. I'm just telling you what they did there. That's what they did in China. They took all the dead bodies and they incinerated a lot of them. Maybe not all of them, so don't quote me, but that's how crazy the death toll was there. Um, so New York City, they're big frozen containers of people that wouldn't have died if we didn't have this virus. But we have the virus. That's what it is. So I think 2 weeks ago I went on a run with my epidemiologists and scientists. They just happen to be an epidemiologist. It's great to have a running crew with out of 7 guys. One of them happens to be a scientist and is married to an epidemiologist. They're the ones who told me what they were projecting 2 weeks ago, which hopefully helped you guys. I think I've been on top of this in a lot of different ways, from China's perspective, and then I had the whole perspective on Europe from my cousin who's Homeland Security, who was telling me how Italy was under wraps and then how Spain was next and how anyway, they do think that it's going to be 18 to 20,000 deaths in New York City, and they're still modeling not the peak in 8 to 10 days. They think more like 21 days or like 14 to 28 days. So obviously the longer the peak goes out, the more people are going to die, and that's freaking crazy. What could we do? Stay inside, not do too much. What was I about to talk about? The bull bear debate on lives. There's no bull bear debate on lives. It's crazy. It's just so putting the market hat back on. Okay, the bull debate is if we do peak in sometime towards the end of April, maybe beginning of May, then maybe what I'm being told, the concept the government's going to use, because there is come mid-May, they're going to try and open up a portion of businesses, and then by that point, all these hospitals will have just dealt with the peak, so they're all set up with their ICU, with their procedures that they can handle cases. So what they're going to call taper, you're going to hear the word taper a lot. Peak, taper. During the taper time, they're probably going to lift the bans, and then the numbers will all go down, and the media will probably stop sensationalizing all the numbers and all the headlines. It just happens. It's just the way life is. People build a callus to it. Like Italy. Italy was the obsession. 600 deaths, 700 deaths, 900 deaths, 1,000. It peaked, and now it still has a lot of deaths, but no one's talking about. Oh, it's only 300 deaths now. I mean, whatever. It's crazy. That's it. Same thing like the lottery. Remember the lottery? You used to play the lotto for $1 million. Hey, let's go play the lottery for $1 million. And then with the Mega Millions and all this stuff, now people only play the lottery where the lottery gets attention when it's like $540 million. Oh, I'll play now. I won't play when there's 100 million. The 100 million is not enough. Now I'll go play. It's 540 million. But headlines just have to be bigger and more grandiose to get attention, and that's how they sell goddamn advertising, is by who has the most sensational headline, and the most that sells is fear. Okay, no one's talking about how many lives have been saved. No one's talking about how really 97%, of the people who get it get better. But that's insensitive to talk about that. So I won't talk about that now. So we'll see. Today's unemployment number was big. They actually took into account for more than what people thought. I think next month is going to be crazy. And for anyone who tells you this isn't an economic event, they're out of their minds. It was started as a biological event, and it's turned in so much more than an economic event. I still think the ramifications, I traded through 2007 through 2009. I lived through it, are going to be crazy. People say it's not as bad as that. I think it's going to be worse, and I hate to say it. But that's what I think. What do I think? I don't know. I'm not a brain surgeon, so what do I know? It's going to be a little different. The residential, it was a residential crisis for housing, because you know why? In 2007 through 2009, people owned their home, a vacation home, in 3 spec places with no money down and interest only 0. So that's why all those places went into foreclosure. Now the banks were very smart. That's the one thing the banks did, is they don't let people do that anymore. When I went to refinance my house 10 years ago, I had to I had to disrobe, to get a loan. So it's been very, very hard to get loans. So the people who own the houses, they own one, etc. So it's not like that kind of crisis. But I think commercial real estate is going to be really in shambles. Landlords, more of like new school landlords, not old school landlords that don't have mortgages, because of the new trends of business moving forward. But that's a whole other conversation. So listen, we're gonna just take it day by day. This is like, it's April 3rd. We're in week 4. We have at least 4 more weeks. So what could you do for those 4 weeks? Do what you can. I say control what you can control. What could you control? You can control your routine. You know, how you approach the market, how you prepare, how much effort you put into it. You can control your home life. You know, try not to fight too much with your spouse. No stupid fights. I know you're on top of each other. Just don't do it. Have another glass of wine. No, I'm kidding. Don't have too much wine either, or too much beer. You know, I think I've fallen into a little trap that I have 2 beers a night and it's like it's nothing. So you don't need to drink every night. Drink every other night. No, I'm kidding. But you know, keep your kids. You know, the kids know a lot, by the way. They have TikTok. They get alerts. So you don't try and belittle what's happening. Just educate them. You know, on how safe they are, and if they follow the rules, the chances are they won't get it. And if they get it, we'll deal with it. You know, I had a run with Chase the other day, and we were running. I'm like, you're going to see the next 3 weeks. You can hear about a lot of people dying. You can hear about a spike in cases, and you're going to read about it. It's going to be very sad and eye-popping and crazy. But you know, this too will get better. But this is what's going to happen. Like, we're going to do everything smart to try and avoid it, and we're going to do everything for the greater good to not pass it around. You know, we're going to keep positive. We're going to go running. We're going to shoot hoops. We've been doing a push-up contest every day also. Not a contest, but, you know, we do 10, 9, 8. So little things like that to keep your kids fit and mind working besides schoolwork. Also, he's going to learn sign language, okay, starting Monday, because the schools aren't giving enough work. I said pick a language. First he was going to do Chinese, but he's going to do sign language. So I think that's not a bad idea. If you find like your kids don't have enough work from school, you know, pick a language to learn for them. You know, or let them pick their own language so that they're accountable to it. And I don't know. I'd say call your mom and your dad if they're still alive as much as you can. Say hi. Call your family. Call your best friend. Do some Zoom stuff. I did Zoom last night with like 7, 10 guys, and it was great. I haven't seen them in a while. It was a lot of laughs. And if you could pay it forward, pay it forward. If you could afford it and you're having your best quarter trading, don't tell everybody, because you know they'll think you're an asshole for boasting. But we could talk about it because we're all traders here, and you know the environment's very busy, and you know you could also be proud that you learned and you put yourself in a position to take advantage of markets like this and not get caught in it, because everyone has the same opportunity to learn technicals and have their system and their process. So you can't be, you know, what's the word? No, not ashamed, but just don't brag. Just take some pride and let whoever is your spouse, whoever's the trader, the man or the female, know that you're in a good spot. You know, you've learned how to make monies when we're trending in a portfolio approach. You've learned how to make money when it's tactical. You have a good bearing on longer term approach, and then you also have your balance in life, which goes further than anything. Because balance is key. Bad day in the market doesn't make you a bad person. Okay, it's just a down day, and then you get to burn it off some way, and you have to figure out what it is that you want to do to help you deal with those down days. And then if you're in a rut, which a lot of people get in ruts, take your size down. Take your size down if you're in a rut. Don't try and make it all back, okay, in 1 or 2 days. No. You chip away at it. You know, one day you get green, you feel a little bit better. The next day you make a little bit of money, and then all of a sudden you put some days together and you're out of your rut. But don't swing for the fences because you're trying to make everything back. That's how you're going to blow up. And definitely don't do levels versus levels. You know, I mean, definitely don't do, you know, buy into some kind of scenario and say this has to stop going down. Or if you're short and you're short truly, oh, this has to stop going up. Have your plan. All right, now I'm done babbling. I hope you guys are still. If you're still watching, you know what? I appreciate it. Anybody still watching it over there on the what's going on with Tesla? Oh, let's see. It's on the lows. They sold even the good news in Tesla. I actually was short. I was long and short this. Let's see what it looks like here. You guys wanted me to take a look at Tesla before? Actually, I'm going to end on a Tesla anatomy of the Tesla trade, because I feel like there was a lot to learn from this stock. Okay, so let's bring this over. We'll end with Tesla. Okay, a lot of people made a lot of money with Tesla. I made a lot of money with Tesla long, and they made a lot of money selling calls when it went parabolic, and then I stopped trading it when it didn't make sense anymore. Okay, why? Look at Tesla. This is when it broke out. Remember the 821 day? This is when it took out 340. Remember the channel here, 380 to 400? Well, that's why I was so excited right around here, because I figured we were in a 4-year channel. We were going to break out above it. Then what did it do? It followed the 8 and 21 day the entire time. Was strong. The king of momentum's names would go, you'd come back to the 8 day, hold it. Go, come back to the 8 day, hold it. Go, and then you had these tradable moves too, these little flag type moves where you could have, just readjusted each and every time. They were awesome. Awesome. Okay, boom, right there. Another one right here. And then finally you had this late stage parabolic move, okay, which wound up bringing it, actually this one, that big doji. And then right around here, you had your lower high, your gap down, lost the 8 day, you sell it. If you didn't sell it there, you had your tradable bounce to the 21 day broke there. That's when you probably had to say, okay, we're done. Now you have a high, lower high, and then this didn't even take back half of it, and then we went all the way to 350. And now it's a whole lot of nothing. Down here, if you remember, I sold some 350 puts and 380 puts because I'm like, we're going to, because it was so extreme, and I also thought the market was going to bounce. And then we were long on this day, sold on that day, which is true. I'm not lying, not just pointing out a chart. Like there's some guys that point, oh, I did this, I did that. The virtual trade floor knows exactly. Otherwise, they would laugh at me. Did we play Tesla, guys, last week? Did we go from like 470 to 550? Anybody play that trade with me on the VTF? No one's really listening anymore. Let's see. VTF, anybody? That was a good one, and we also sold puts. But anyway, Tesla is a really good example of above the 8 and 21 day. It's long, there's momentum, shorts are caught, and then it breaks right here. And then if you didn't get out there, he had one more attempt to the retest there. That's it. And now it's a whole lot of nothing. And that's it. Be safe. Keep your brain strong. Keep doing your fitness. Be as strong as you can for your family. And this is going to pass. It's going to pass. It's just a matter of how and when. And we just got to keep saying until it does. Have a great weekend. And hopefully you enjoy my little videos I do when we're running or I'm sitting on the couch with Cadence and just try to, show you everyday life. And, and cherish your everyday life. Seeing things aren't so bad. You're at home. You're on your couch. You're watching Netflix. You're spending time with your family. And, get the right perspective. Perspective is key.